I don't think like Solana's the Ethereum killer. I think Ethereum's here to stay. Everybody's building on it. Money's flowing in, especially in public companies. Institutions are going to build on it, and it's going to be the dominant player. And there will be a place for Solana. There will be a place for these others.
This episode is brought to you by Uphold, which is a great crypto platform that makes it easy to buy, sell, and stake crypto assets. Uphold has over 300 plus cryptocurrencies, including Bitcoin and all the top altcoins, and they offer a crypto staking on over 19 crypto assets. I've been a user of the platform for many years. They are safe and reliable. They don't commingle or lend out your crypto funds, and they are 100% reserved. You can review their transparency report. Uphold also offers an amazing rewards program where you can earn up to 5.25% on stablecoins. This rewards program also allows you to get 24-hour early access to new tokens that they list. And to participate, you just simply have to open the app once per month, deposit $50 once per month, and trade $50 once per month. And the stablecoins that they support includes Ripple's RLUSD. You can earn up to 5% on that stablecoin and 5.25% on USBC. So if you'd like to learn more about Uphold and all the great services they offer, visit the link in the description. Hey folks, welcome into the Thinking Crypto podcast. I'm your host, Tony Edward, and joining me today is Charles Allen, who is the CEO of BTCS. Charles, great to have you.
Hey, Tony, thanks so much for having me.
Yeah, Charles, I'm very excited to speak with you because BTCS is using or doing an Ethereum Treasury strategy. And we're seeing this trend grow, and I'm very fascinated to get your perspective, why Ethereum and much more. But let's kick it off with your background. Tell us a bit about yourself and your professional background.
Okay, so I grew up in New York City. Went to Lehigh and studied mechanical engineering. After that, got my MBA at William and Mary. Worked in investment banking. I did engineering and semiconductors before that, and I was at a boutique investment bank doing SPACs, pipes, and reverse mergers, which was kind of the underbelly of Wall Street, if I'm being honest. But it was a great learning experience in terms of all the different sides of capital markets. So that's kind of me on the career side until I landed at BTCS.
What was your first encounter with crypto? Because I saw you did spend some time at some crypto firms. Tell us a bit about your journey there.
So honestly, it was kind of pure luck.
Mhm.
And this dates back to 2013. So at the time, I was working in New York City. My wife was like the number two lawyer at BAE Systems, the big defense contractor, and I was going back and forth, and we had our first child, and I was looking to get out of investment banking. I wanted to go work for a technology company. I was thinking initially in like a CFO role, kind of pre-IPO, help them get ready and go public. And I mean, at this point, this is very early days in crypto. And as I said, it was kind of dumb luck. A term sheet landed on my desk to take, at the time it was called Bitcoin Shop. That was the name of the company. It was an e-commerce site where you could buy stuff with Bitcoin. And there was an investor group that, went out, wanted a crypto company, wanted to put it into a public vehicle. And for me, when this term sheet landed on my desk, I'm like, this is easy. I'll just help these guys renegotiate it. They had no idea what they were doing. There's probably at that point two people in Washington, D.C. that actually knew how to do a reverse merger. So I took the company in about a 4 week period. We raised, I think I increased the valuation by about 40%, raised about $2.3 million, and we got it public in 4 weeks. So it's a very fast deal. The other side really knew what they were doing. And in that, I ended up taking over as CEO of the company. Frankly, the business wasn't very good, but it really opened my eyes to Bitcoin. I read the white paper. I'm like, this is really interesting. Having studied mechanical engineering and done an MBA, it was like, okay, this makes sense, right? From a financial standpoint of, having a decentralized token that you didn't have intermediaries in the middle of to enable settlement. So that was kind of my introduction. And then it's been, a long journey over the last, 11 years with BTCS to get to where we are.
Oh, for sure. I mean, wow, you got in pretty early. You're an OG, as they would say. But it's fascinating because you said you wanted to go work in tech, and do you see this technology, this asset class emerging of both tech and finance? Because you have the token aspect, but you got the blockchain aspect as well.
I think it's definitely the merging of technology and finance, and I mean it's fintech, right? But it's cutting edge fintech. It's not what you typically think of fintech is, technology for traditional financial systems. This is like rewriting the whole rails of how things work, how assets are moved globally. So from that perspective, I think it's just a super exciting industry, and probably this is probably the most exciting time. I mean, for the last 10 years, it's just been a beatdown from a regulatory standpoint that, you really had to be a survivor to make it. If you weren't willing to kind of grind it out and fight, you were going to get put down by the regulators and, the banks. And so it's been an interesting ride so far.
Do you think part of that fight is because this time around versus other technologies where you had the internet disrupting communication, the way we move data and so forth, disrupting the yellow pages and all that, right? But this time around, you're disrupting currency and the movement of value. Do you think part of that fight was that because look, governments control the money and you introduce these different currencies and you can operate outside of them?
I think that's a big part of it. I think the government was afraid of it. When you look at the SEC, which I think has been the one of the most challenging regulators for the last 10 years, I mean, apart from the last 6 months, for any company in the crypto space to deal with, and the lines are getting blurred between, when is it a security? Wait, it was a security and now it's not a security. Like, how does that happen? And I mean, that's a side note. Like that can't happen in accounting. It's actually if you had a security and you report something as security and then it becomes not a security, you have to restate all your financials because it's not the current accounting concepts don't even allow for that. So I think the regulatory framework was not ready for the technology and the innovations that happened, and they're really playing catch up. And that catch up is unfortunately taking a very long time. It's something that should have taken a couple of years. We always assume regulators are going to be slow. I'm pretty sure they don't work as hard as I do. But they were just against it, right? And the administration was against it, and it made it a very challenging environment.
Yeah, for sure. And I think we have to mention we're recording this on Wednesday, July 16th, where the House is going to vote again on the three crypto bills, the Genius Act, Clarity Act, and the Anti-CBDC Act. Are you expecting those to get passed in the near term? And maybe by the end of the year, we have full-on crypto legislation becoming law?
I hope so. I mean, that would be, yeah, I'm relatively optimistic that that is going to happen. If it does happen, it will spawn I think a tremendous amount of capital flowing in, and it'll spawn a lot of innovation, right? There have been so many large institutions have been on the sidelines. The only ones willing to do this were like small startup companies or those willing to go to war.
Hmm.
And we were one of them. And it's, even now when you look at the amount of public companies, all the public companies primarily until relatively recently were Bitcoin miners. And we were the first public Bitcoin miner. And it's because it was a model that the regulators couldn't really go after it. You buy computer equipment, you plug it in the wall, and you get some token. I mean, they beat them up, like, well, on accounting and all sorts of other issues. But when you start to get into more complex concepts, like staking, right? And we had the SEC come after us, and we had to go testify and basically they were effectively stating that if you go buy a Raspberry Pi on Amazon, download open source software and run it, and you run a validator for, Ethereum, you're a securities issuer and a broker dealer.
That's crazy.
What? Like, how do you? And it could be other ones. I mean, maybe the broker dealer wouldn't work for Ethereum, but if you did it for another chain where it's delegated proof of stake, I mean, that's essentially what they were saying, which is impossible to comply with for anyone. And the purpose was just to end the industry. And that's all the only thing I can think of is why they would do that.
Right. But it's amazing how things have changed. I mean, a complete 180 and we've hit the ground, 0 to 100 and at the cusp of crypto legislation. So brighter days are ahead. Tell us about BTCS and what you guys do, the history and all those things.
Yeah, so I'll do the history. It's been a long history because we've been at this 10 years or a little over 10 years. So as I said, we went public in 2014 via reverse merger, first public crypto company. It was an e-commerce site where you could buy stuff with Bitcoin.
Mm,
That really wasn't much of a business, to be honest. The second we took it public, my thought was, how do we pivot out of e-commerce or make this a viable business model? We started making small investments in some companies to, build a name in the industry and look for opportunities. I was kind of thinking of it as a SPAC. Let's just grow by acquisition. That brought us a lot of connections. And then we started Bitcoin mining in 2014. So we became the first public company to mine Bitcoin. I saw that as a way to actually drive revenue. If you're a public company, or at least then, now when crypto wasn't well known, the thought was we need to show revenue growth. That's the metric that Wall Street is going to benchmark you against. And Bitcoin mining was really the only way you could do that. You either ran an exchange, which was, huge regulatory hurdles. You needed a lot of money, or you could get into Bitcoin mining, which was you could scale, slowly. As money came in, you could buy more equipment. And so we became the first Bitcoin miner. Unfortunately, we got kind of stonewalled by the SEC. They wouldn't allow us access to capital on registration statements and just would delay. I think it took us a year and a half at one point answering questions. And then we had a, crypto downturn. I think Bitcoin fell 74% and basically got flushed out of mining.
mm,
So after that, we had to do, a pretty big pivot, clean up the company. We had convertible notes, we had preferred, we weren't on the NASDAQ, we didn't have an ATM, we didn't have the financing structures that we do now, which make it night and day. And so at that point, we kind of scratched our heads and said, well, what do we do? How do you, how are we going to make money as a public company? And we kind of, to some extent, threw in the towel and said, we're just not going to build anything. We're just going to buy Bitcoin, or we're going to buy Ethereum. And that's the strategy. We're going to raise debt, we're going to raise equity, and we're just going to buy crypto. This is, I think 2016, 2017. This is before
wow.
MicroStrategy. This is before, now we were doing it, albeit on a very small scale. Investors didn't fully understand what we were doing. But that worked. We did that for a couple of years. We looked at a couple of acquisitions that didn't come to fruition. For example, like we looked at BitBuy, which is now WonderFi, which got acquired by WonderFi and then was bought by Robinhood recently. I don't know if the transaction's closed. We looked at a few others, nothing that we jumped on. And that strategy actually worked. Let's just buy crypto.
Mm,
Because if we had done that in the beginning when we got into mining and we did the e-commerce, like if we had just bought Bitcoin and Ethereum, we'd be like a multi-billion-dollar company. And so that was like lesson learned. And we started buying, I think, at the time, Bitcoin at like 2,300, Ethereum at like $250. We subsequently pivoted out of, I think it was around right at the end of 2020, we realized we can't just have a business that's going to buy crypto. I mean, actually, it turns out you can. Michael Saylor did it.
right.
But it seemed like we needed more focus, especially if you're not at that scale. We were at that time still on the bulletin board, which is really hard to get off. Very few companies uplist from the bulletin board to the NASDAQ and basically do. We did. And so at that point, we decided to exit Bitcoin. We actually paid a dividend in Bitcoin. I think we were the first public company to ever do that. You could take it in cash or you could opt in and have it in Bitcoin. I took Bitcoin, it's done, and I think we got it at like 40,000. So it turned out it
Wow.
was a really good deal if you took the dividend,
Sure.
the blockchain dividend and held it. And we kind of went all in on Ethereum, and that was the beginning of 2020, pre-merge, but when the Beacon chain launched. And what we did is we started staking. So we were the first, public company to, be doing an Ethereum, basically a digital asset treasury strategy where we were acquiring Ethereum, but instead of just holding it like you do with a Bitcoin treasury strategy, we were staking it and we were actively running the nodes. And so that's been our business model for, the better part of 5 years is to accumulate Ethereum, stake it, and generate, yield by growing our Ethereum, balance sheet. And we had some other tokens as well and had a staking as a service, but at the core, it was really all about, growing Ethereum.
Charles, that's incredible. And you guys were ahead of the curve, although on a smaller scale, in comparison to, let's say, MicroStrategy. And I don't know if a lot of people recognize that you were one of the first movers to do this, which is amazing. Testing the waters and a world of uncertainty here in the United States with crypto. So kudos to you and the team. I mean, that's pretty incredible that you guys, were brave enough to do that.
Yeah, I think we've probably done most I think we've probably been the first company to do most everything in the public crypto market space. We're the first public crypto company, first public Bitcoin miner, first public company to pay a dividend in Bitcoin, first public company to, what else have we done? At least crypto company to list its securities on Ethereum's blockchain via Upstream, which was pretty cool. The SEC shut the whole thing down, of course.
Mm.
Shortly after we did it, and some others did it. First staker, first Ethereum block builder that's public, first digital asset treasury strategy. So, and the problem is we've done all these things and it's cool to be first, but like who cares? At the end of the day, we've been kind of small, under the radar, unnoticed, primarily because we didn't, the SEC was the biggest viewer of our website. Literally, we watched them watch us, which is kind of scary.
Mm.
We had a service that would allow us to see what pages they were looking at and what they were doing. And I'm sure they were looking at us. They're looking at all our filings, of, looking at each other like, okay, are you gonna charge us with something or not? And obviously they didn't do anything. They dropped everything, and the whole industry is kind of freed now. But to me, now is the time where it's really exciting, and I'm really excited to have other players in the market. For example, Joe Lubin with SharpLink,
Yep.
Tom Lee with, was it Bitminer, and was it Sam Tabor at Bit Digital. So it really kind of brings credibility to what we've been doing for the last 5 years. And what's interesting about what we're doing is nobody's doing it the way we are,
Mm.
because they've all just really jumped in. And so our model is very unique in that, at the end of the game, all these companies are doing one thing, right? It is grow your ETH per share, maximize your yield, revenue and yield, right? Is probably a better way to think about it,
Sure.
and provide the public markets, which, and the capital that is in the public markets, basically a wrapper on ETH yield. And that really is what MicroStrategy is doing. And I think that's where we kind of excel, because a lot of our operations fuel that. And we've been doing that 5 years and nobody else has been doing that. So,
Mm.
that's effectively, where you find us today.
Oh, absolutely. And just this morning, there was news that you were included in the Russell Microcap Index. So congrats on that.
Yeah, it's nice. It brings liquidity, right? It's funny. To survive as a small company, you have to be, smarter, harder working, a bit lucky, and to get big is not that easy.
Mm.
So I think we're probably one of the few companies around from, like, 2013, 2014 in the crypto space. And the fact that we're now growing, I don't know what our exact market cap is, 100 plus, it's moving a lot today. So to be in that position is phenomenal. We've got over 100 million in, assets, which is really big compared to where we were, at the beginning of the year. So we've raised, I think, $62 million, as disclosed year to date. And we're doing it in a very unique way, right? No, like, to be able to use DeFi and get the lowest cost of capital on Aave, nobody's doing that. At least in the public markets. I'm sure they will, right? When they realize, wait, you can borrow at a net cost of capital of about 3%, and it's perpetual debt that you never really need to repay until you want. There's no banker's fees, there's no paperwork. It's, I want to raise $10 million today, and I'll do that in under 5 minutes and put it to work.
Hmm. So with the capital raising, you have equity, convertible debt, and then the DeFi, which I think is profound because I mean, like you said, no one else is doing that right now in the public markets. Tell us a bit about I know you mentioned like Aave and but how are you going about, is this straight up DeFi, like borrow and lending on these DeFi protocols?
Yeah, so basically what we do, and I could kind of walk you through, I don't know if you've looked at that slide, that kind of, Ethereum accumulation flywheel.
Mm.
So if we raise money off our ATM, we're selling into the market, at the prevailing prices. We're actually pretty good at it in terms of, getting good pricing, because that makes it more accretive for our investors. We'll take that money, we'll turn around, we'll buy Ethereum. We have lots of sources to do that. And then we'll take a portion of that Ethereum, or sometimes all of it, depending on kind of where the balance sheet lies at a particular time, deposit it in Aave, borrow USDT, so we're borrowing, stable coins against it, and then go buy more ETH on DeFi platforms. So right now, I think we're using CowSwap, which is basically a solver-based, searcher that looks at the other DeFi platforms as opposed to like a Uniswap. So, that's getting us, really good pricing. And then we'll take those proceeds and we'll go stake it. And we'll either do that via solo stakers ourselves, or we're a solo operator for Rocket Pool, which gives us, I think it's about a 30 to 40% increase on the rewards we earn. The end goal of all this, and I know that's really complicated, is to drive yield on our ETH at a rate that's better than what other companies are doing, and drive revenue, because those are the metrics Wall Street really cares about. I want to invest in this company and I want levered and scalable access to ETH. And so if we're growing ETH per share at a faster rate and we are earning a better yield than others are because we're staking and we're a block builder, that, without getting into all the complexities of what that means, it basically means as an investor, you've got a better return in BTCS. And then if you stack on top of that we traded a huge discount to the market fair market value of other companies with similar strategies, it's kind of like a no-brainer, or it should be, I would hope.
So let's say I'm a shareholder. Do I get a dividend from this, or if I don't want the dividend, is it just reinvested? How does that all work?
Well, so we're not paying dividends at the moment. If you're a shareholder, basically, if our ETH per share is growing and we're raising capital at a creative basis, you're benefiting.
Hmm.
So, like the deal we did for convertible notes, we did that I think in early May. Was that the stock was at $2 and we did a convertible note with a conversion price of 585 on like 7.8 million. So a 200% premium to market. We did have to give warrants in the deal, but the warrants struck at 275. So a 40% premium to the market price at the time we did the deal. I mean, it obviously helped, shoot the stock up because the investors basically, we think this is undervalued. And that deal was basically an arranged deal where we could go up to 57 million. It's not a facility where we can draw against it, but if it's mutually agreed, we can go back and pull against that. And so I mean, that's a really good deal, right? To be able to raise money above market. And then if we don't like the price of our stock, we can go borrow on Aave. So I think that leverage where the dilution with respect to the amount of ETH we're accumulating is frankly, we're just doing a better job. We're more capital efficient than a lot of the other players I think what kind of makes us stand out.
Oh, absolutely. Now, a big question a lot of folks are going to have is why ETH? Because you previously were holding Bitcoin, you pivoted to ETH, but there's other companies going towards Solana and obviously Bitcoin and some even XRP and things like that, right? And some folks are going with the index or the basket. So why ETH, and are you planning to add other assets as well?
So from a like I'll start with the first question, why ETH? When we were initially Bitcoin and ETH, the thought process was we love Bitcoin, but it's a non-productive asset.
Mm.
It doesn't do anything, right?
Yeah.
And so when you look at it as a public company, why are we holding an asset that's non-productive? And I think, I mean, look, Michael Saylor's done an amazing job selling Bitcoin. He really doesn't even talk about strategy that much. He really talks about Bitcoin,
Yeah.
and that's what he's pitching. And yeah, I like Bitcoin; it's great, but it doesn't really do anything. You can't really build on it. And I know people say, well, you've got stacks and you've got rootstock and you've got light. You have all these patchwork things that try to make it something it's not. It's really good at what it is, but it doesn't. I think Ethereum can do so much more. It can do what Bitcoin does and more. So I don't want to like hammer on Bitcoin, but when we looked at it as a public company, we said we can have a yield generating product that's wrapped in a public company that provides access, and we can accelerate that through active operations by securing the network. It's kind of like investing in a Bitcoin miner, except you don't have all the overhead of depreciating assets that go away. We're holding the underlying to allow us to do this, and then we can scale up and increase our yield and revenue by doing that. And I think that's what was really attractive about Ethereum, at least from holding it as a public company. And then we get into, well, why is Ethereum attractive as utility?
Mm.
Yeah, like 50 to 60% of all stable coins are built on top of Ethereum. It's got the most developers building on it. And so it's the most secure, proof of stake blockchain. And in my view, globally, I think basically everything's going to be tokenized. It
Mm.
just makes sense to be able to move securities, tickets to movies, uh, you name it, leases, car titles, stable coins, assets should be securitized, right? Or tokenized, excuse me. So, when I started my career in engineering, it was, when the internet came out, and basically the internet was a way to distribute on a global scale information.
Mm.
We've built through the traditional financial systems and other intermediaries ways to move digital representations of assets, but they're not really good. When blockchain technology allows us to basically tokenize real world assets and move them on a global basis instantaneously without a third party in the middle.
Yeah.
That is so powerful. And if that happens on a large scale on Ethereum, and it is, Ethereum is going to be huge. It's not going to be, it's not going to be with $3,200 as it is today. It's going to be 10,000, 20,000. I don't know. It's going to be a lot bigger, potentially a lot bigger than Bitcoin because it has that utility. It's got a deflationary um, supply system. We have a kind of primer on Ethereum on our website that your viewers can read, and it gives a really good overview of why Ethereum matters. And I think if everything is built on it, nobody will know,
Mm.
right? Like if banks build solutions on top of Ethereum, whether it's layer twos or they're building on the L1, you're not going to know as an end user because it should be behind the scenes, right? Like, if I order an Uber, I don't care how it gets there. I just know I went to my app and what data center they use, what technology would, that was what people were talking about in 2000, 2001, the technologies behind the internet. They were investing in it. Something has come to market when you don't care why it works. You can move $1 around the world for free, right? Instantly. Or you can move $1 million for the near for like a quarter around the world. Or you can move your car title, or you can, now it's stable coins, right? Like you can borrow what we're doing, and we're the proof in the pudding. We're literally, if someone doesn't want to take the risk of crypto, they could own a stable coin, um, lend that out on Aave. We're effectively borrowing it and we're collateralizing that loan. So they're making a nicer interest than they would in most checking accounts. They're making 4% and change.
Mm.
And we are getting to borrow at a low rate because we've eliminated all the brick and mortar. We've eliminated the need for human beings in that intermediary role. And we're getting a low cost of capital. They're getting interest better than they otherwise would. And it's over collateralized. So they have basically no risk. And so it's a win-win, right? And if the collateral falls below like a certain health level, it gets liquidated. I mean, that's amazing technology. And that's just one use case. And you start thinking about all the different use cases. And so that's where I think Ethereum is really, really going to shine. I know we can do the comparison of, well, Solana is faster, has more transactions per second. And, I think there's a place for multiple chains. It doesn't just need to be Ethereum. There's, Chainlink has a purpose. It's a great blockchain. We're not focused on that at BTCS, but I don't think they're necessarily all competing. I think the financial institutions and the major players are going to build on Ethereum because it's the oldest, it's the most stable, it's got the brand recognition, same reason why Bitcoin's still around and popular. So I don't think like Solana's the Ethereum killer. I think Ethereum's here to stay. Everybody's building on it. Money's flowing in, especially in public companies. Institutions are going to build on it, and it's going to be the dominant player. And there will be a place for Solana. There will be a place for these others. But as a public company, as you said, we used to have a bunch of these. We've shortened that list, and we still own some Solana, but primarily for the most part, we're basically all in on ETH. And the reason for that is in the public markets, if you want to invest in ETH, you don't want to you want to invest in a levered Ethereum play that's going to give you the most um, performance for that asset. You don't want this commingled asset, right? It's just too complex. So I think that's we kind of had that before when we were having a staking as a service product,
Mm.
but we've really refined that to be like, okay, let's go all in on ETH and provide, that levered exposure.
Yeah, that absolutely makes sense. And then the dynamic between, let's say, Bitcoin and ETH, right? Let's say in a bear market or market downturn, um, does holding ETH give you an advantage because of that staking yield that is continuing and compounding, versus Bitcoin? Like, it's a great store of value, but it does move with the market. It's digital gold, but it does move with the market. So does ETH having that staking component give it an advantage?
I think it should. I mean, I think in a bear market, you care less about your yield and more about just the overall value of your currency. I mean, if you had 100 million and it dropped, it got cut in half and you went to 50, I think you're going to be a little bit more upset about getting your assets cut in half than, well, I'm still making, X% on my 50. But yeah, I mean, it's compared to as a digital treasury strategy, I don't think it really matters much if it's yield generating. I
Mm.
think where it matters is institutions looking at, should I buy a, an Ethereum focused digital asset treasury strategy or one that has actual operations that increase yield and revenue over a Bitcoin one. And if they're kind of looking at the utility, well, one has yield, the other doesn't. And so, yeah, one can raise more money in the capital structure, but we're doing that with Ethereum, right? We're using DeFi. You can't do that with Bitcoin. Right? I mean, I guess you could do wrap Bitcoin, but I mean, is that even Bitcoin anymore? So it's definitely very differentiated on the Ethereum side, and it's also new, right? I think with, in the last few months it went from just us for 5 years to all of a sudden there's, three other major players in the market.
Mm. So speaking of the bear market, how are you guys preparing for that, right? Because right now the valuations are going up on these assets. But what's your strategy, and as much as you can share, for preparing for that and coming through those bear market cycles?
Well, I mean, first off, BTCS has lived through every single bear market cycle in the last 11 years. So, uh, there's proof in historical performance that we can survive.
Yeah.
As far as like what we do on a strategy standpoint, one, our team is very lean. We're about 7 people. I've never been a big fan of just hire and hire and hire, and you have this huge overhead that now you've got to keep up with and you've got to pull it back. So we're relatively conservative on our head count, and we've kept a relatively, human capital asset light business model. We actually put a piece up on this is like our model is a business to network model, right? You can have B2B models, business to business, B2C, business to consumer. We're a business to network model. Why? We don't have to deal with the customers. We don't our customer is the network for all intents and purposes. And by doing it that way, we can have a human capital asset light business, which keeps our cash burn down. And so it's, a B to N, it's an infinitely scalable B to N business. And so where we are today with, over 100 million in cash and crypto, even with the leverage, things have to get really ugly for us to for us to go out of business, it would have to get really, really ugly. But I think the upside is really there. And in terms of what we do to prepare, I mean, if we think the market's getting too frothy, we'll just delever,
Okay, got
right?
it.
I mean, that's the key because like we can delever Aave in, minutes between the three capital raising, avenues we have, the basically the TradFi and DeFi, we have access to three different sources of capital with different, risk profiles around that. We can trade around the volatility. So there's a lot that can be done in a pretty sophisticated way
Sure.
to, prepare for bear markets.
Yeah, that definitely makes sense. Now, I read that your ETH holdings crossed 29,100. Tell us about that, and also how are these assets being custodied?
So it's actually, I think we're at like 31 or
Oh,
32.
okay. My number's off. Sorry.
It's moving fast,
Yeah.
right? I don't know when this is gonna, when this is gonna air, but it's the numbers are improving.
Hmm.
So in terms of custody, I mean, we've been at this, 10 years. So we've used a lot of different providers. We basically self-custody our assets. I know a lot of the digital asset treasury plays are using qualified custodians. And the reason that's primarily happening is you have, like a biotech company or a gaming company, and all of a sudden the profile of these deals is you have companies below 10 million market cap that are for all intents and purposes kind of looking for a strategic shift
Hmm.
to regain interest because their business is failing. They may get delisted. They've maybe even gotten delisting notices. And so they're desperate to do something, right? That's why they're willing to do one of these deals. I mean, now they're doing so well, I think everybody and their brother would do one. But the when you do a digital asset treasury play, you can't change all the operations. Per NASDAQ rules, you're not allowed to do a reverse merger. So if you just put a new company in there, you'd have to go get shareholder approval. You'd have to do all this stuff. When you throw a token in there, it's just a pipe financing. And so you don't have to do all that. But you can't go fire the whole board of the NASDAQ company. You can't come in and operate that company. It's against the rules. So
Right.
these companies that just do these, that recently did the deals, have the old operations which they need to continue to run. They have the old management which they can't fire. I think maybe after 6 months or a year, and with the timeline, is you can kind of you know play a little bit of musical chairs and redo it.
Hmm.
And so most of them are going to qualified custodians. They're going to the BitGos or the other places and say, hey, you custody our assets, you stake it for us. That's not what we do. So we self-custody our assets. We have wallet solutions that allow for that. And then from there, that's how we're able to interact with DeFi. So if you're using a
Right.
qualified custodian, you're going to be using DeFi through them, and it's going to be a very different picture versus us. We run the validator nodes for ourselves, for Rocket Pool. We self-custody our assets, and we were able to interact with, DeFi because of that.
Yeah, that definitely makes sense. Um, you guys have all, for a long time have been ahead of the curve, doing a lot of innovative things, especially along the lines of DeFi. So I'm curious, what's on your roadmap that you can share? You probably can, you don't want to give away all your secret sauce, so to speak. But, are you exploring other opportunities in DeFi as well?
We're exploring a lot. So I think about what I can and can't say. So,
Mhm.
I mean, at the core, the big things we're looking at is growing our ETH holdings, growing our ETH per share as well, and maximizing revenue, which is essentially is going to drive yield, right? And hopefully beyond what others are doing. So that's kind of the core. There's a lot of things we're looking at on DeFi, on block building, um, that could increase effectively, our yield. I don't want to kind of share too much there, but we've got, a really good team working on that. Like we recently, on the block building side, we recently, started getting order flow from MetaMask, which is obviously, the biggest wallet that's used in DeFi. We've started getting order. We have a staker protection plan where we're kind of pre-buying block space. We invested in ETH Gas and are partnering with them. They're a block space market. So you can pre-sell your block space and chop it up. So there's a lot of things we're doing that I think in the end, without getting into all the complexities, are going to drive additional revenue and yield.
Hmm.
I mean, that's kind of the end goal. There's three kind of projects I'm super excited about. I'm not going to talk about them. They're kind of one-off projects that I think would be extremely exciting. I mean, we've done all sort. We like to do fun things, right? Like we've, paid a dividend in Bitcoin. That was pretty cool. We tokenized our stock on Ethereum via Upstream.
Hmm.
So we're a relatively creative company in terms of the things we're willing to try and do, and I think those can create tremendous shareholder value. Beyond telling you what they are, I'm not going to do it on this call, but
Sure.
in the short run, it's really let's scale this thing up and be one of the major players in this space.
Yeah, for sure. That's exciting. Um, more of a macro question. I got in the crypto industry in 2016. I couldn't imagine publicly traded companies adding crypto to their balance sheet, and using, the Treasury strategy. How how long what's the lifespan of this trend, if you want to call it, or is this something permanent? Because like gold, right, or somebody's legacy assets, crypto becomes that eventually that legacy asset, and companies can continue to hold forever if they want. Do you think it's a forever thing, or this thing is over in like 20 years?
But that's a long time horizon. So I don't think crypto is going anywhere.
Hmm.
Whether public companies will continue to use that as a treasury, it's a maybe, right? Maybe they'll say, okay, look, I want USDT. I mean, it's technically crypto because it's a yield generating asset on your books.
Hmm.
For a lot of companies, it's going to be hard. If you're a biotech company, you may not want the risk of putting crypto on your books if you're a large established company. The ones you're seeing do now, they're doing these deals. They're small dying companies that, if they didn't do this, would be stay at $3-6 million market cap on the Nasdaq, do really, bad financing deals and probably get delisted or, hope for a Hail Mary. I mean, this is the Hail Mary for them, right? To be honest, right? It's like, they're really excited to be able to do these deals. So I don't know how it shapes up in the long run of large established companies say, hey, let me put crypto on my balance sheet. I think maybe in 10 years, it's still crypto's not really Main Street yet. Like, with the new legislation that we hope will come through, you're going to see it become institutionalized.
Hmm.
It's going to be a long time before you see, CEOs of large companies put meaningful positions, I think, of crypto. I think USDT is very easy. I think if you're for a lot of companies, it'll be hard to be like, wait, well, I'm buying Bitcoin. Why am I doing that? Or I'm buying Ethereum. Um, it'll be easier when it's institutionalized. And I don't know, things are happening fast. It could be 5 or 10 years, but we'll see.
Yeah. Yeah, I'm very fascinated to see how that plays out. And, you know, do they go to the ETF route? Do you hold the assets directly? Do they participate in DeFi, once the regulations are clear? And obviously it'll take time for them to explore these things, do their R&D and figure out what works best for them. But yeah, it's just fascinating because these assets are unlike any other assets, right? And many of them are hard cap, so you have the supply and demand economics. It's truly global, right? It doesn't stop. It's trading 24/7, no holidays. It's pretty amazing.
Yeah. No, it's remarkable. And with a, positive regulatory tailwinds, we're at an inflection point where the scale is going to be enormous.
Mm. It's exciting. Charles, great stuff. I love what you guys are doing. I love that you have been your BTCS has been a leader, innovating ahead of the curve in many ways. I'm excited to see the future updates. I got some wrap-up questions here for you. First, if you could create your own metaverse, what would the theme be?
I think it'd probably be like a retro city, uh, nestled between mountains and an ocean, right? So you have, the tranquility of the sea, the adventure of the mountains, and the life of a city.
Mm. Rapid fire questions. Favorite food,
I'll go sushi.
favorite musician or band,
I'll go Grateful Dead.
favorite movie.
Lord of the Rings.
I was just watching Lord of the Rings the other day. Favorite book.
Flash Boys.
And when you're not working at BTCS, what are you doing for fun?
Competition hand gliding.
Oh, nice. Charles, pleasure. We'd love to have you back on in the future and looking forward to the future updates around BTCS. Thank you so much for joining me.
Yeah, thank you so much for having me.